Hi, I'm Ali Comley, and I'm pleased to be involved in the marketing of this complex. This is a great entry level for everyday investors to purchase a tenanted unit for only $132,000 and receive a healthy rent return. There's a lot of information available. We've tried to cover every aspect, 16 pages, covering all the questions you're sure to have, all in this information pack, which we can post to you. I wanted to get an opinion on this opportunity from those in the know to share with you. Andrew, I sent you the booklet a few days ago. What were your thoughts on this?
My immediate thoughts are that the yield on the units seems quite good. This is because the purchase price of the units is good in relation to the rental income. I also believe that the retirement sector and ageing population will continue to impact us here in South Australia, so this should be a market in demand in the years ahead.
I also wanted an opinion from someone who studied real estate investment very shrewdly over many years.
Units are only $132,000 with an 8% gross return. I was very interested to have a look at this. What type of properties can you buy in Adelaide these days for this price?
I was happy to see that this was not a typical retirement village setup, in fact far from it. These units are all in their own community titles, so buying one here is absolutely no different to buying one in the street near you.
To receive the net indicator yield of around 5% may be very attractive, and of course there's always the capital growth possibility.
As I mentioned, yield is the one thing that investors should always consider and should continue to focus on as part of their return, but the other part is capital growth. Combine those two together gives us our total return. So I looked at the returns very closely. The gross rent is very high, in fact one of the highest I've seen. $205 a week for an outlay of $132,000. You normally have to purchase something around $200,000 to get that sort of rent return, so I like that straight away. Working through all the various tax claims, these units actually work out to be only around $19 a week out of pocket to investors. That's only around $1,000 a year. Now with the $7,000 cash back available to early buyers, buyers could pop that lump sum in their bank to cover all their costs for around 7 years. Or even better, dump this cash onto their own home mortgage.
Yes, that cashback offer was very attractive. A great buffer for the future. The fact that the unit is already tenanted is also a big plus.
Capital growth is a very important consideration in property investment. At only $132,000 purchase price, this leaves good scope for capital growth. Remember, investments are not a short-term focus, and so a minimum 5 to 10 year window is always sensible. Okay, let's do the sums. If the units are only costing you $1,000 a year after tax, it's only around $10,000 to $12,000 total outlay over 10 years, which means that you don't need much capital growth at all to get the return you want. And don't forget, you get that $7,000 of that up front, so really it may be as little as $5,000 as your total investment over this time. So really the return is further enhanced.
I would imagine that small investors, syndicates or family groups interested in property investment will be taking a close look at this offer.
The requirement for such accommodation appears to be increasing and will certainly suit demographic in our community, which means that demand should hold up, which helps support the value as an investment.
I think many people should find this offer very attractive.
As the experts have commented, the returns here are solid. This is an excellent opportunity to purchase a set and forget investment property, where A-class respectful tenants will be in occupation. And what a worthwhile investment.